Alright, guys, good morning from this side. Um, and welcome to a new week. Yeah, I was supposed to make a video during the weekend to show what happened last week. Last week was a very tough week, I must say. In January so far, I've only had one good week, and the last 2 weeks have been up and down. So, but we thank God, it's all good. We still have hope because Forex is a game of probability. You don't allow one day loss or one day win to define you, or even a 1 week to define you as well. The goal is to end every month in profits. So, but at the same time, it still doesn't define you. But at least if you have an edge, I believe you should be able to end the month in profit. Maybe one or two might just be different, but at least inside 12 months, you should be able to end like 10 months in profit if you really have an edge in the market. Yeah, when we say an edge is you having a strategy, a system, an approach towards the market that there's no how the market can dodge that your system, no matter how manipulative the market tries to be. Because the real truth is, the real truth is the chart, the way it is you bringing out a system that enables you to catch the rightful move that you're looking out for. There are different moves in the market, and the market keeps moving, it doesn't stop moving. But when you have a system, you have an approach that you've tested and you've seen how it works, then you should be able to at least know what you are looking for inside the chart. You should be able to know what exactly you are looking out for. And if you've really practiced and back tested that very thing, you've seen it several times. So when you see it in the market, in the live market, you should know, okay, this is my system, this is what I'm looking out for. And then fine, at times it might fail, but most of the times it should work because why, you've practiced it and it shows, you understand. So let me quickly just go to the higher time frame first of all to just show an overview of how the market is looking. The market is obviously bullish, and it's obviously bullish, so that's what gold has been up to. Last week was the last 2 weeks, or last week was just all about consolidation. Yeah, last week was all about consolidation. All this phase was just consolidated market, and only those who scalp were able to make money from it. And actually, I do scalp, but because even though I scalp, the fact that I scalp does not mean that I want to trade in a consolidated market like this. You understand? Because sometimes I want to catch 1:4, and my 1:4 is kind of bigger than this, so because of my stop loss and all that. So, but then the market end up reversing when you've seen yourself in about maybe 1:2, 1:3 profit. Market reversed against you. Um, that was what was happening, and that's why consolidated market is not really good for both scalper and even those who swing and all that. Because once market is consolidating, it helps you might not be able to get your full targeted profit, because why, the market is just ranging within a very short zone, and you never knew that that's how it's gonna be. You're expecting, sometimes maybe you'll be expecting that it's gonna pull out from the consolidation, but it still keeps being in consolidation. Yeah, so look at what happened quickly. um this is it. All these are the higher time frame key zones I marked out previously. So obviously you could see what happened here. This is just a break and came back to retest this very key zone. So actually, from the look of things, I don't expect gold to come down below this for the now, because this is a strong key zone that it has respected right now. So from now for all we should be expecting is more buy movement. Because why, after coming to respect this key zone, it came up and break this very zone. Now it's this a fair value gap right here that need to be filled. So there are likelihood that the market will still come back to fill this gap. That's the real truth. The likelihood is going to come back to fill this gap. So, but you have to be very careful. because the market is all bullish at the moment. You trying to sell, because I've learnt my lesson. Selling in what they call it, all-time high is very risky. Even though sometimes your strategy, because what I noticed so far is most times your strategy might show you sell, my system might show me sell on all-time high, and you notice that the sell is not being respected. It's just keep taking you out. But naturally, apart from the fact that there's a gap there that need to be filled, um, if your strategy is showing you sell, at least you should sell. But gold these days is just in a very bullish run, so you selling is very risky. So if you are selling, maybe you just use low lot size, and then maybe you could use the fact that there's a gap here to be filled as an extra confidence, or an extra confidence for you. So let me quickly go down to 5 minute time frame and just show. I had a rough week last week, I must say. um but it's all good. We thank God. Yeah, the market was very, very tricky that last week. So let me just show the rundown of on Friday, so I don't take much of you guys' time. Yeah, you could see this. Some of this thing I actually put here might be a trade I take, some might be a trade I didn't take. But I think I took this. I had a loss. I took this. I had a loss there, and then I had this running in good profit last week. Can you believe I ended up making just little money from this, because the partials I closed partial at this point. And then when I go here, I was in about one is to two to three, 1:2, because I already closed partials. I was in 1:2. The market just switched off. Wow, I was surprised. And the reason why I was thinking it's still gonna go up is because although I was seeing something here, look at this, this is looking like a head and shoulder, head and a shoulder. So thereby showing bearish movement, So I don't know what happened. The market came and gave an equal high here. So this is a liquidity zone that the market later came and took out. Okay, no. The market is yet, yeah, it took it out. Yeah, this was on Friday. So this is a liquidity zone. The market later come and what? Push. Look at it. So market came and pushed through all those zones, and in short, what happened last night was just surprising. Imagine this gap. Like, many persons made money. Those who usually keep their trade over the weekend, which I don't used to do most times. So people who keep their trade way on this buy limit. Some people set buy limit already, and they just made money. But I feel it's kind of risky to just set buy limit in a place where you are not seeing structure. So that one, it looks like gambling to me. That's just the truth, because there is no structure. Why are you setting what they call it, buy limit, in a place where there's no structure? Like, to me, I see it as gambling, because there's no structure. On what basis? Even though we know that gold is going to buy, but on what basis are you setting your buy limit? But what to do? That's for us, for you. Everybody have their pattern on how they make money from the market. The goal is to make sure you are making money. Are you making money? And yeah, you are making your money. It doesn't concern anybody, so long you have something that's working for you. So what I did now, this quick markup for today, what I'm seeing in the market today, actually I'm selling, even though it's very risky. I just used one position, 0.2 lot size, to see if I can just make small money. I'm risking just $100 on that very trade. I didn't buy this buy, I didn't take this buy. I was expecting it, but I didn't take it. But I took this sell this morning, and it's in some little amount of profit. I'm just risking $100. So based on my strategy, all the markup I did, let me quickly show you why I did the whole markup. Yeah, naturally, the way I view the market, I go to 1 minute time frame sometimes to look at it based on the way I view the market. Um, so this is calling me. Okay, now look at the way I view the market. This is a key zone that was broken. It was taken out. The reason why I call it a key zone, I've explained key zone before. So it was taken out. Now it becomes a more valid key zone if it's being retested and respected. Are you getting it? Now it's a more valid key zone. Why? Because after it was taken out, it was respected at this point. Break and retest. Because I told you I usually trade break and retest because I noticed that's what usually shows in the market. It happens in the market. So why not take advantage of it and use it to analyze your market instead of confusing yourself or making too much complex knowledge things out there. They will say, okay, SMC, ICT, for me, they are all just terminologies out there. But the most important thing is understanding how the market moves and knowing how to catch your move in the market. I get to the point. So what do? I see this as a break and a retest. If I was to trade this an entry for me naturally, because why? The market break and it retested and give me a bullish candle as a confirmation. I'll take my entry right there to buy. So but I didn't take the entry. I didn't take it because I was not awake. I was asleep at that time. Even though I was awake, I'm not supposed to truly trade on Asian session. So now look at what happened here. After making this bullish movement, came back here. Now it broke this point. This is a break and a retest for a sell. Are you getting it? A break and a retest for a sell. So that's why you now notice sellers are present at this point, buyers are present at this point. So you notice because of the both buyers and sellers are present. So this is like an indecision zone between the sellers and buyers. So you have consolidation happening within that zone. So now this is an inducement. The seller zone is being taken out. That's called like an inducement. You understand? The sellers are induced. You understand? That's what we call inducement. So all these points from year to year is all inducement zone. You could expect a sell to happen from all this zone right here. So that's what you are seeing. Sellers are present at that zone. So you see the market came induced, sold down, came back again, induced again because it's still within the seller zone. The seller's pressure was able to still push the market down, giving this entry. This is an entry right now. Break and a retest. A very good entry. In short, this is like an A plus setup for me. Inducement plus break of structure is what? An A plus setup. That's a very short confirmation. Most of the times it works out. That's the retreat. But the patience to wait for it is what matters. But I can assure you that if you take this alone as your strategy, like having an inducement plus break of structure to that very position where the inducement happened, then you see your entry there. This is an entry, second entry right here, a break and a retest. But now, not if I'm to trade, I will not take this second entry. You know why? There's a buy side inducement right here present. This is a buy side inducement present, and it's being induced. So as the buy side is being induced, taking this position for an entry is risky because most of the times it might take it out. It might take it out, you understand? So it's very risky to take an entry here. Rather, I'll take an entry here, but I won't take an entry that is coming from an inducement zone. Are you getting it? So now look at it. Kept on bouncing. So because of the buy side pressure right here, buy side inducements present at this zone, that's why you could see a break and a retest right here. So buyers are present, showing the move to the up. Now this has created a room for inducement right here, and then the liquidity right here for the buy side liquidity was then induced. This is an inducement happening right here to push for buy. After the inducement, you see a break and a break of structure to the upside. This is a very perfect entry. After seeing this green candle, you take this entry, you make small money, but it was now resisted by this very key zone for the sellers. It was resisted at that key zone, thereby bringing the market down to the next buy inducement liquidity, which is from year to year is now the next inducement zone. Are you getting the point? So now this key zone is being respected, bringing the market down to the next buy side inducement zone. Now the next buy side inducement zone, you wait for a break to the upside before you take any entry. Now here is the break. Look at it right here. This is the break and a retest. So this is a key zone to take an entry for buy. If you are to scalp to make just few money, Because the market is actually consolidating. But as a scalper, I can make money from all these entries I'm showing right here. Are you getting it? So this is the break and the retest, and this is the small movement to make money. Now look at it, pushed to this point. Now look at this, there's an inducement right here from here to here, so which was being respected. The market got there and respected that inducement, thereby pushing for sell. Now after respecting it, it did a break and a retest. Now I can't take this entry. You know why? It's coming from a key zone. Look at the key zone. Are you seeing the key zone here? So it's coming from a key zone. To take this entry is risky because this key zone that is coming from is a buy side key zone. You cannot sell from here. If you sell from here, this is coming with a pressure to hit here. Selling from here is risky. It might be taken out. So, but it was respected. It didn't take it out. But I'm just telling you how I do my confirmation. So now this break to the downside, pushed to the next inducement, which is the next buy inducement, which is this very zone now that is being mapped out. It has not been induced. Now it was induced here. Now are you getting it? The moment it break this, the whole zone like this, then that's what we call inducement. It has been induced now. After inducing, I was waiting for a break to the upside, break and a perfect retest to the upside. So I actually mapped out this initially from here to here. I was thinking it's gonna come and touch it. It didn't touch it, so I didn't take my buy right there. I didn't take the buy because why? This, look at what I was expecting it to come back and touch like this. So this green candle did not touch it, so I didn't buy. Are you getting it? So let me actually cancel it. I didn't buy. Why? Because it didn't come down, so it didn't tap this very blue line. Now look at what now happened. After it didn't tap it, it now give something like showing like a sell rider from this zone. Look at it right here. This zone showing a sell to push down the sell. So everything is just showing consolidation. So now what now happened? I'm seeing in, okay, yeah, this is being induced and sell to the downside. Are you getting it? Now the next inducement is from here to here. It's also been induced and it's giving me a break of structure to the downside. So I took my entry right there. Are you getting it? Because this is what I'm always saying. Look, this was the first the sell inducement at the top side right here that was being respected. Look from here to here was being induced. After inducing, it gave this break of structure, but this is not a perfect entry to enter because why? It's coming from the buy side key zone. Now this you will not take this entry because it's coming from the buy side key zone. Are you getting my point? Now, but it was being respected. Now after it was respected, it came down to induce a buy side liquidity. Look at it, this is an inducement of buy side. Now inducement against inducement, because this place has been taken out as well, which is an inducement zone. Inducement against inducement, you will not take an entry, you will hold on. But now the last inducement is this sell side inducement. Now it has given a break of structure. That's a perfect entry to enter. Why? Because that's like inducement against inducement, but this inducement is coming up stronger with showing you a what? A break of structure to the downside. So you take that entry right there, because inducement against inducement is like a neutral battle. Now you are having a break of structure to the downside, showing you the market direction. So the way I trade naturally is in a way that the market will hardly dribble me. I study the pattern that the market is presenting. I watch out for the pattern the market is presenting before I take my entry. Are you getting it? So now look, after doing this break to the downside, it was being induced. Look at it, it was being induced and gave another break to the downside again. That's what's happening now. Now my stop loss is here because in case it's coming for an inducement again, at least I'm ready for it. Are you getting the point now? I'm in profit right now, but if it's coming to induce this zone from here to here, no problem, I should be ready for it, which is even looking like it has induced it already because this candle has already penetrated this liquidity here. But you know the market can be funny. So what that's it. That's just it for today. Let's see if I can get to my TP. This is a liquidity right here because this is like an equal low, so I expect it to be taken out. And yes, so if this market should hit my stop loss now, I'll know that sellers are not present anymore in the market. Buyers are taking over the market. That's the way I decided to start setting my stop loss in a point wherever if the market should take me out, I'll know that that bias is gone at that moment. I should be looking out for the next buyers. So thank you. Do have a great week. I'll keep doing videos like this to explain and show more about the market. You're welcome.